see where is everyone. So what we did, we actually finished all slides. We have only a few problem solvings, especially some journal entries from chapter 11. Chapter 11's journal entries, we'll do it today. And then we will keep at least one session. Hopefully we'll finish all journal entries today for our review. And our exam 2 is in 1 week. It'll be good. Relax. It'll be good. Exam 2, you all know, right? Okay, very good. This time, I didn't finish the exam yet, but definitely by tomorrow I'll post the reviews and the sample exam. And then definitely next class Wednesday I'll show you some examples. But the exam will be pretty much, most of the problems are based on conceptuals, no big calculations, we all know, right? 3 journal entries, 2 will be from chapter 9, all drop down menus, and definitely notes payable, interest payable, that one. And we will do a couple of entries today, 1 will be on the exam. Okay, Jake, so let's focus on the journal entries. It's not difficult. Today we will learn how we can convert any accounting numbers from the IFRS to GAAP and from the GAAP to the IFRS, because we saw some problems caused by these different accounting standards. Last class we just went over that chart, right? And this chart I'll give you during the exam. You don't need to bring it, calculator, scrap paper. Actually this time you don't have much to work on scrap paper. Okay, ready? Because calculations are very tiny. But the journal entries, if you feel comfortable on a scrap paper, you are very welcome to do. And for Connect, you will see Connect combined in some of the entries, but that's fine. The same thing here. If you would like to do it on a paper, that's fine. But Connect might follow a specific order. You can check it. But either way, you will get full points. So here, what we will do today, we will do some journal entry problems, and you need to use that cheat sheet. So we don't have any slides, which is good. Rather, you get ready with your pen, pencil, calculator, some journal entries. We need to use this chart. All of you have it? I have some extra copies. If you need one, I can give it to you. And then, let's see what entries we can do today. Okay, so if you check it, this chart, the differences between the IFRS and the US GAAP, this is the IFRS column, this is the GAAP column. There is something called component depreciation. Can anyone figure out where is it? Component depreciation and what it is from this cheat sheet that I'll give it to you. Jay, do you have the sheet? Okay. Component, you need one, Mike?
I need one.
You need one? Okay, I have some extra. Component depreciation, what it is? Oh, this is the problem we'll do. Bless you. Who can tell me component depreciation? Okay. Component depreciation, please figure it out, and someone please help me. What's the main difference? What do you mean by component depreciation? I mentioned last class, if you have a submarine or an aircraft, it's a huge big asset. Yeah, this, watch the video because we have tons of multiple choice questions. And I have 2 for both of you, okay? So this one, we will use it. So, what is the component depreciation? Who can help me, please? Yes, Hunter.
When there's like different pieces on a larger, that can be appreciated, so.
Right, when you have a huge big asset, you have different pieces of components. When you, okay? And you have different values and lifetimes. So you can calculate the depreciation separately. instead of considering the entire asset value and one line. Right, so problem number, what number? 19. Let's read that problem. We will do it. And what we're gonna do for problem 19, we will calculate the component depreciation, we will calculate the entire depreciation, and then what we'll do, we will do the journal entries, 2 sets of journal entries, one for the GAAP, another for the IFRS, and then we will convert it from one method to the other method. So, let's do number 19. You guys will help me with the calculations. Surat Limited paid cash to acquire an aircraft on January 1st, 2023. Right. And then what happened? This is the cost of the aircraft, 30 million rupees, right? Sounds like it's Indian currency or some South Asian currency. The aircraft has an estimated life of 40 years. This is the entire value of the aircraft. This is the life. No salvage value. We all know how to do the straight line depreciation. But they figured out that the aircraft has 3 significant components: fuselage, engines, interiors, right? So now, if you are the GAAP company, you will just take this value, divide it by the life, that's it. But if you are the IFRS companies, for these all 3 components, you will calculate separate depreciation and then you will add those up. So first question, determine the appropriate account for the aircraft. Right. So first we will do 2 sets of accounts or journal entries, IFRS and GAAP. Does not matter which one you do first, but Connect will show first the IFRS and then the GAAP. So we'll do the same. Then part B is we have to convert the US parent, right? You have to convert from IFRS to GAAP. So we're gonna assume the subsidiary is using the IFRS, how we can convert it so that it reflects the GAAP numbers. Let's do the easy part first. Who can help me to calculate the depreciation by following the US GAAP? US GAAP. US GAAP will take the entire value and the life. Right, Hunter? You wanna do that? Who has a calculator? So the entire value of the aircraft is how much? Everyone, please do it. Jordan is doing it. Everyone do it and help me. Who can tell me? Thank you, Eri.
30 million.
30 million is the value of the asset of the aircraft. Go ahead. Thank you, Eri.
Divided by 40.
Live at 40. Okay. Now who can tell me the number? Your annual depreciation is 750K, right? Thank you. So the US GAAP company will do like this. How about IFRS? IFRS will do 3 separate depreciation. One is for fuselage. How do you do that? This is your cost, then you divide it by 40. This will be your fuselage depreciation. Then engine divided by 30, interior divided by 20, and you will get the 3 components separate numbers. Then we'll get the total. So do it for the 3 components. What is your fuselage depreciation? Straight line. Cost is 10 million. Life is 40 years. Who can do it? Yes, Dan? 250? Okay, so 10 million divided by 40. So let's do the IFRS company. So it will be 250,000 then. Make sure the zeros are good. I don't make any mistakes. Okay. Who can calculate the engine's depreciation? 15 million divided by 30. You wanna do it? Mark, you have a calculator. Please do it. Matt, Arwen, Eddie. 15 million. Engine's cost is 15 million. It's not difficult. We are doing 3 separate straight line depreciation. Jordan, you have the number. 500,000. Everyone do it, please. 15 million divided by, place you 30 years, 500,000. Where is Sophia? She's fine. Okay. How about interior? Who can do it? Might use your calculator or phone. You did it?
Yeah.
Okay, interior, what's the
250,000.
250,000? Everyone please do it. Mario and Steve. 5 million divided by 20 years, 250. So if you add all these three components depreciation, what's your total depreciation? Okay. 1 million, right? So you see that just because of two different depreciation methods, your depreciation expenses are completely different. Now I told you a bit last class, which company will have higher expenses? These are depreciation expense. Which company, the GAAP company or the IFRS company, will have higher expenses?
IFRS.
IFRS. Which company will have the lower net income?
GAAP.
GAAP. Are you getting it? No. GAAP or IFRS? Which company will have the lower net income? IFRS, same. Higher expense means lower net income, right? Makes sense, Matt? Which company has higher expenses? Who are not getting it yet? Which company will have higher expense? IFRS. So since they have higher expenses, they will have lower net income compared to the GAAP company. Which company would have lower retained earnings? Assume everything else is the same. Which company will have lower retained earnings? We went up to the net income, lower net income, IFRS. So if you see all these changes, now your company is using the IFRS, we have to convert it to GAAP. By how much? Their expenses is higher by 250K, so we'll increase the expenses. Their net income is lower, their retained earning is lower, so we will do some conversion entry. So, conversion entry is actually part B, but part A is just do the regular entry. Let's do it. And you know, on Connect, you don't need to write it, it will be very quick. On the exam, just drop down menu. So what I'm gonna do, I'll just try to fit it in on one page. So let me fold this one. And then I'll show here, I'll try to write tiny. IFRS first, IFRS entries, and then the US GAAP entries, right? And then we have to do all the entries because the first one says that determine the appropriate accounting for the aircraft that for this 2023 and 2024, they purchased it, look at the dates, they purchased on January 1st, 2023, but they ask you to do 2 years entries. Okay, we'll do that. We will do that. Let's do first 2023. IFRS, what happened on January 1st? January 1st, IFRS purchased the aircraft, right? Let's write the date here, January 1st, 2023. So what will be the journal entries? Very basic, you purchased aircraft, aircraft debit, and let's say you paid cash. Yes, they paid cash and cash credit. And you paid 30 million. Okay, don't worry about the currency now. Just focus on the number because now we are doing, bless you, just the method conversion, not the currency. If the company would follow the US GAAP, they would do the same entry on January 1st, 2023, as if the subsidiary is following the US GAAP. Same entry, no difference. So, aircraft debit, 30 million, and then cash credit. You please do by hand or write it, type it on Connect. It will be quicker and easier, Matthew. Come on. Okay. So then what happened? December 31st, you calculated the depreciation. Who can remember the depreciation journal entries? SC 221 depreciation. How do we record the depreciation expense? How do we record the depreciation expense? Good job. Go ahead.
Debit,
Debit what?
debit, depreciation expense,
Very good. And credit?
credit the item,
Okay. If it's intangible, sometimes we directly credit it. But for regular long-term assets, we go through another account, which is
Accumulated depreciation.
factor, which is accumulated depreciation, right? Hey, sounds familiar? Sounds familiar when it's good? Matt? Right, so let's do the journal entries. You're almost there, Mike, but you know, if it's sometimes intangible assets, we directly reduce it. But most of the time we go through accumulated depreciation account. So, of course, we subtract it from the depreciation number on balance sheet. It's a contra assets. Very good. Let's do like this way. Let's do the journal entries. So IFRS will do, this is December 31st, 2023. So what you guys help me, you will debit depreciation expense, and you will credit accumulated depreciation. And you know what? It's the same entry for the IFRS and GAAP, the same accounts, but just the numbers will be different. Accumulated depreciation. Because this is universal journal entry. If the company would follow the depreciation US GAAP, they will record the same accounts. Depreciation expense debit, depreciation expense debit, and credit will be accumulated depreciation. Very good. Now who can tell me the number? Who can tell me the number? You have this calculation sheet. What was the IFRS depreciation number? What was the GAAP depreciation number? Yes.
For IFRS, it's 1 million.
IFRS, it's 1 million. Very good. Everyone, you know the numbers. How did we do that? Here, component. On the other hand, GAAP number is
750,000.
750. You see, is it difficult? So far, nothing is difficult. It's just SC221 basic entries. They say 2 years together. Okay, Ellie? 2 years together. So, next year, December 31st, 2024, what we gonna do? Straight line depreciation. Every year, we record the same depreciation entry. Now, this is December 31st, 2024. You do the second year's depreciation, same thing. Can you guys do it? Next year, they will keep doing it for 40 years because the life of those assets are 40 years. Well, to be very particular, the numbers might be different. You will see that for components, but once they calculate it, they will keep recording it. The difference comes only at the beginning when they calculate it. Now, let's see. The second year's journal entry will be the same. Depreciation expense debit, accumulated depreciation credit, and the GAAP method, it's the same accounts. Depreciation expense debit, accumulated depreciation credit. Now, who can tell me the numbers? Someone else? Who can tell me the numbers? Straight line depreciation 2024. What will be the IFRS depreciation number? What will be the GAAP number? Okay, I know Ari already has the numbers. So, someone else, Ari will check, okay? I just need to make sure. Mario or Steven? Shh, don't tell him. Okay. What will be the straight line depreciation? It's the same every year. What's the IFRS number? What's the IFRS number?
Yeah, I don't know.
Okay, Ari.
1 million.
Okay, show it to them. Now, Mark, you raise your hand. What is it? Mario, look. IFRS, we calculated it. Oh, you probably came a little late. I don't know. Here, IFRS, we use the component, okay? Component depreciations, okay, Mario and Steven, 3 components, and you add up. And it's a straight line, so every year it will be 1 million, right, Mark? Very good. Eddie, you are good, so every year it will be 1 million. It's not difficult. Now,
Wait, I thought IFRS was. Oh, yeah, never mind.
IFRS 1 million, right? How about the US GAAP? What will be the depreciation number when or Matt R?
750,000.
Very good, right, Wayne? Okay, so these are the basic same entry, right? You see, Mario, this is US GAAP will take the total value and the life. So we will do 750. Up to this, nothing complicated. Up to this, you did it in your first accounting class. If you do journal entries. Now, these are the basic entry. Now we will learn the conversion entry. Conversion means we have to convert the IFRS number to the US GAAP number. So, let's see. It says that prepare the entries that the US parent would make on December 31st, 2023. Right, December 31st, 2023 and December 31st, 2024. Because they need to do the consolidated worksheet. So, what they will do, the subsidiaries using the IFRS, these are currently their entries, numbers. So before doing the worksheet, the GAAP will convert the IFRS numbers to the US GAAP numbers. And we will do 2 years. Now look at that. If the entries and the numbers are the same, you don't need to do anything. Right. So for this one, purchase of the aircraft that both system recorded on the day they purchase is the same. So you don't need to do with conversion entry. But for the depreciation expenses, accumulated depreciation, the numbers are the different. So our goal is to convert these IFRS numbers to the GAAP number. So currently they have this IFRS number, but the parent will convert it to the US GAAP. That means the parent would reflect the US GAAP numbers. We will do it via journal entries. US GAAP. Right, so you need to read the problems carefully whether part B is asking for conversion from the GAAP to the IFRS or IFRS to the GAAP. We will learn both. Now, look here, what we can do. The conversion entry we do at the end of the year. So let's do the conversion entry December 31st, 2023. Focus on 2023 numbers. This is the same, so we don't need to worry anything. Here, I want to show the GAAP numbers. So what I need to do? I need to reduce the depreciation by how much? 250, because they already have depreciation expense 1 million, but I want to show the GAAP number, so I have to reduce the depreciation expense by 250, right? Makes sense, Jordan? Jake? Same thing. Accumulated depreciation, currently they are following the IFRS, the number is 1 million, I have to show it 750. So the same thing, I will reduce the accumulated depreciation by 250, right Eric? Reduce by how much? 250. When you have to reduce something, what do you do? The journal entry? Reduce or remove or eliminate. What do you do? Flip it, right? Reverse it. If it's a debit balance, you credit it. If it's a credit balance, you debit it. So I am reducing depreciation expense. Depreciation expense is a debit balance here. Of course, expenses are debit. So to reduce it, I will credit depreciation expense. Depreciation expense 250. And I will also reduce accumulated depreciation. Accumulated depreciation itself is a contra asset or a credit balance. So to reduce it by 250, I will debit it. So debit accumulated depreciation 250. So now if you do this entry and this entry, right? This is their original entry, then the parent did this conversion entry. These two together will reflect the gap numbers. Right, so we just cannot erase, delete, or type the numbers. We do it through an entry. Is it good? This conversion entry, is it difficult? This one? Not really, right? Second year, what will happen? Second year is a little bit complicated, not that much, but if you already told me that second year's conversion, let's do it. We are now on December 31st, 2024. Now, remember one thing. Second year, I see the same thing, expense. Same, their expense is higher by 250. Depreciation expense is higher by 250. So I will reduce it by 250. Then, accumulated depreciation is also higher by 250. I will reduce it. But, remember one thing. Accumulated depreciation, it's an accumulated numbers. It's a balance sheet number. So, it will be accumulated from the year to year. So, that means last year, it was higher by 250. This year, it is again higher by 250. So all together, it's 500. Now you may question it. Depreciation is the same. But what do? All expense and revenues, we close it. At the end of the year, we do the closing entries. We adjust it with net income and retained earnings. So income statement balances, we do not carry forward from the one year to the other year. Sounds familiar? Did you do like the entire accounting cycle? What do we carry from one year to the other year? Only the balance sheet things. So that's why I understand every year depreciation expense is higher, but whatever the difference in 2023, that was reflected in their net income, we closed it against retained earnings. So we need to do something little task with the retained earnings. But the accumulated depreciation we will carry forward from one year to the other years. So the accumulated depreciation's difference, the next year will be the 2 years effects. But not the depreciation expense, but because revenues minus expenses, net income, we already adjusted with the retained earnings. So we have 2 points here. We'll do it. Another point, just think about 2023's net income numbers. You already mentioned it. Please, everyone, someone please try to think about it. 2023 depreciation expense for the IFRS was 1 million. GAAP was 750. IFRS expenses is higher or lower? Everyone.
Higher.
IFRS company's net income is higher or lower?
Lower.
IFRS company's retained earning was higher or lower? Lower. So retained earning, it's reflected by all your revenues, expenses, or net income. So in 2023, their retained earning was lower by 250K. So retained earning, it's also cumulative on your balance sheet. So we will also adjust the beginning retained earnings. So now, second year, little bit complicated, but look at that. 3 items we will do. First, second year's depreciation expense, we will reduce by 250. And depreciation expense, only the second year. I'm now doing the second year's conversion entry. So depreciation expense, we will reduce by 250. It's a debit thing, so I will credit depreciation expense. Depreciation expense, 250. And then this year, accumulated depreciation is also higher by 250. And I already explained, it's a balance sheet things. Last year, it was also higher by 250. So we carry forward the balance sheet things from the 1 year to the another year. So for 2 years impact, the accumulated depreciation is higher by 500,000. So I will lower it. So lower, it's debit thing. So it's a credit item. So I'll debit accumulated accumulated depreciation by how much? Area. Yes, 500, right? Because it's 2 years cumulative impact. So accumulated depreciation, we debit it 500,000. Journal entry is not complete yet. And you just mentioned that retained earnings, last year their retained earnings was also lower by 250K because their expense was higher, their net income was lower, so their retained earnings was also lower by 250K. Retained earnings, usually it's a debit thing or credit thing. Retained earnings, it's a debit thing or credit thing. Usually the balances are always credit. I will increase it, higher it by 250. So I will debit it or credit it. Credit, yeah. Okay. If I need to increase, do the same thing. If I need to decrease, do the opposite thing. Okay? So credit, beginning retained earnings. This is actually 2024's beginning retained earnings. So this entry, please make sure you correct it. Most of the students will do up to this if you don't connect A, B, C, D, part A. But here, this is the entry many students will give up or just random things. Just try to memorize. No, please, this entry, please try to understand. So I will write a little note. This is not the part of the journal entry, but trust me, if you see the note later, you will understand. Don't mechanically just memorize stuff. Okay, so what we did in 2023, I'm just writing it. 2023 on IFRS. This is just note, IFRS. Depreciation expense was higher by 250. That means their net income was lower. That means their retained earnings was lower. So increase beginning retained earnings. This is one point. Second point, accumulated depreciation. Accumulated depreciation. 2 years, right? Year 1 plus year 2. Reduce 2 years. So reduce 2 years. It's cumulated. Reduce 2 years. So, and then the depreciation expense, I don't have any notes because you already know this is very straightforward. I'm only showing 2024's depreciation difference. But this one is important, especially retained earnings part. Make sure this is not complicated. You know the concepts. Don't try to memorize mechanically. Because you don't know on the exam, if you reshuffle the numbers, sometimes retained earnings will be higher. Under IFRS, maybe their depreciation expense was lower compared to the GAAP. This time it is higher, so don't try to memorize mechanically because every time I see this is the last journal entry. Only few students get it correct. But this will be on the exam, okay? Are you good? Will, did you take notes? It will be on Connect, but you can either do by hand or on Connect. Now we will do couple more. Because today let's finish this chapter. We discussed R&D. We also played some games about R&D, right? Do you remember that? R&D, I have one problem related to R&D. Okay, look at the cheat note, the table I gave you. This one, R&D. Who can remember? The United States GAAP. US GAAP says what you need to do R&D. When?
Can you go back to the entries that we just did?
Yes, please, I will. This one?
So the entry that says like B, like in the middle, yeah. So is that 250,000 because of the difference between the 1 million and the 750,000?
Right.
Okay, yeah.
We are just doing only the first year.
Yeah.
That's why it's 250. This is 2 years. The second one is the 2 years impact. Okay? Good. Very good question. Now we will see similar type of problems, but the difference will be created because of the R&D. Look at the sheet, and who can tell me R&D? What is this? The gap says, what do we do R&D? How do we record it? We usually record it as an expense, unless it's like software company, and unless it's mentioned in the problems, we assume that they record it as an expense. On the other hand, what the IFRS says?
Capitalize it as an asset.
Capitalize it as an asset. So here in the United States, if we capitalize this type of assets, not regular, you can call it intangible assets or deferred cost. You know, deferred cost means I'm not showing it as an expense now, rather I'm moving it, putting it on my balance sheet. Capitalize means what? Capitalize versus expense. Capitalize means record as an asset. Not necessarily you might have the name of the asset, it could be an intangible. If it is like R&D, we cannot see it, right? It's not tangible or physical. Or you can also call it deferred cost. Right. So now, here, what we're gonna do, I have another problem. Sorry, I cannot walk well today. I got hurt my knees, but I'll be good. Okay, so number 27. This one is good. When are you good? Everyone wrote it, the notes? All are good? Okay, now let's do number 27. And we'll see some R&D problems. Okay, yeah, Louise, where are you? R&D number 27. So let's read the problem together again. We'll try to do 2 sets of journal entries, and then we will switch it from this time it's GAAP to IFRS. So let's try to do it. Tresec Corporation incurs R&D cost $650K in 2023. Again, it will have 2 years, 30% of which relate to development activities subsequent to IAS. You know, all of their codifications. You remember IAS, this is like the IASC or IASB standards. They have those prepared by IASC, they call it IAS. Later, IASB came in, IFRS. So this is just a number of the coding. Their codification number, according to this IAS 36, some criteria are met and they can show it as an intangible assets. There are 2 terms, either they can use intangible or deferred cost is fine. Either one is fine. You can check what the Connect says. Probably deferred cost if it's IFRS. So now when they record it as an intangible 30%, definitely the IFRS would try to reduce the expenses. This newly developed product will be in the market in January 2024 and will have sales revenues for 10 years. This is small information you need if you record anything as an intangible assets or a deferred cost and you know the life, you have to calculate some here, depreciation or amortization. So what we're gonna do, first we'll do regular journal entries again for 2 years, the GAAP and the IFRS, then we'll do the conversion entries. So let's do it. Let's do it here, number 27, and I'll try to fit it here. IFRS and US GAAP, which one you wanna do first? They say that, okay, number 1 says US GAAP and IFRS. If you do by hand, doesn't matter, but Connect will see first you are doing the GAAP entries in one tab, then IFRS, and then this time we are converting from the GAAP to IFRS. So let's try to fit it on 1 page. You please try to understand, don't just memorize it. Okay, number 27. Let's do first the US GAAP. Okay, so this part we will show all US GAAP entries, 2 years. This side I'll show IFRS entries, and then I will also do the conversion entries. So now let's see here. First, let's try to calculate the R&D expense. R&D expenses for the US GAAP company. What will be the R&D expenses? It's not a computer software. Yes. Look at the cheat sheet. Look at the cheat sheet. What did it say? Look at the cheat sheet. You see here, R&D. Expense immediately except some computer software. So we assume it's not a computer software. So the entire amount they will expense it. The entire amount they will call it's our R&D expense. So for the US GAAP company, what is their R&D expense? 650, the entire amount, okay, Mike H. Look, here it says that the R&D expense was 650K. So they will show the entire amount as R&D expense. So I'm not doing the entry yet, I'm just showing you the number. US GAAP R&D expense will be 650. On the other hand, what will be the IFRS company's R&D expense? Can anyone help me? They say that 30% met some criteria and they can show it as an intangible assets. That definitely they will do. No one wants to show higher expenses. So what they will do, 30% they will show as an intangible assets and 70% of it they will show as an R&D expense. My question is, what is the IFRS company's R&D expense? Use your calculator. Faster, tell me the numbers. Jack, you have the numbers. Yes, Hunter.
455,000.
So how did you get it? 650,000 and then you took the 70% of it, right? So remember 650 is actually their R&D cost, but they will record only 70% as an expense, which is, I forgot, 455,000. And the rest, they will call it an intangible assets. And that's what everyone wants, right? No one wants to show higher expenses. So either you can take 30% of it or take the difference. So if you do it, IFRS will show 30% of it as an intangible assets, which is, where is that? 195,000. So now you see where are the differences coming from. First difference will be the expense. US GAAP has higher expense, they will have lower net income, they will have lower retained earnings. IFRS will have an assets, US GAAP would not. Now, we will do the regular journal entries. Let's do the regular entry for 2 years. Regular journal entry. So, what IFRS will do? 2 years. And now I'm doing part A. Part A, the journal entries. The US GAAP company will record R&D expense debit, and we assume that all they paid cash. So this is December 31st, 2023. US GAAP will call the entire amount as an expense. R&D expense. I'm just writing expense because I don't have enough space, and they paid cash. So their entire amount will be recorded as an expense. Right, Mike H. The expense, the entire amount immediately. R&D expense 650, cash 650. On the other hand, what the IFRS will do? IFRS will never miss that chance. They will show R&D expense only for 455K. And the rest they will put it on their balance sheet, either intangible assets or deferred development cost or something like this. So the IFRS will show R&D expense 455K, And then the rest, they will call it intangible assets, which will go to their balance sheet, which is 195K. And of course, they paid the whole as cash, which is 650K. This entry is not difficult, just one difference we learned. IFRS will have less expense because it met the IAS 36 criteria. One entry for 2023. Is it good? Everyone, please try to understand. Although it's on Connect, don't try to memorize. Please. Although the problems will be the same, but you need to know how the numbers are coming. Good? Now, let's see. If everyone is done, I'll do the second year. Now, what will happen? The second year, US GAAP recorded the entire thing as an R&D expense. That's it. They don't have any more deals. That's it. Second year, they don't need to do anything. But what the IFRS will do, IFRS showed that 195 as an assets, and if you read the line, the last line here, it says that whatever they are doing for the R&D, they will get benefits for the next 10 years. So they recorded these intangible assets here. From 2024, they will start getting benefits in January. So you have to calculate amortization expense from 2024 because it's an assets. You put it on your balance sheet and you know the line. So what will be the second year's journal entry? We are still on part A, the regular entry. I'm showing like back to back, but on Connect you have to do all GAAP first, then you have to do all IFRS first, right? I think the setting is like that, but I'm showing it so that you can contrast and see the differences. So this is same part A, regular entry for the second year. Now this is December 31st, 2024. US GAAP will not do anything because they already showed the entire amount as an assets. But the IFRS, this is part A, not B. The IFRS showed this 195,000 as an asset and they will get benefit. It's kind of a lifetime. So 10 years. So calculate the amortization expense for intangible assets. Now, Mike H. For intangible assets, we directly can credit intangible assets. We usually do not go through accumulated depreciation or accumulated amortization. So the IFRS will record amortization expense that usually we call for intangible or this type of things, amortization expense debit, and they will directly credit the intangible assets. Right, now remember the amount was the intangible asset was 195,000 and they will get benefit, or you can call it the life is 10 years. So what will be their annual amortization expense for these intangible assets? Yes, Eri?
19,500.
Very good. Everyone, please try to understand so that exam is in 1 week, so that it is easy for you when you will practice, okay? So, very good. We just did the regular entries. Now we will do the conversion entry, part B. Regular entries are very basic. Part B. Let's do part B. For part B, remember now this time we are converting from the GAAP to IFRS. So currently this is on my subsidiary's book. Maybe the parent is using the IFRS, so you have to convert from the GAAP to IFRS. So we will convert these numbers from GAAP to the IFRS. Currently this is on my book, but I want to show these numbers all together. Now let's see. First year's conversion. Right. So what do? 2023 conversion entry. Try to figure out the difference. Try to figure out the difference. Cash. Do we need to do anything with cash? Everyone, do we need to do anything with the cash numbers when I do the conversion entries? No, why not? Same, no difference. How about R&D expense? Do we need to do anything with the R&D expenses? I want to show this number. Currently it's 650. What I need to do? R&D expense? Increase it or decrease it? Decrease it. Everyone try to understand. Steven, is it good? Eddie is good. Currently R&D expense is 650. Matteo, our goal is to show 455. So I have to increase my R&D expense or decrease? Decrease by how much?
195.
195. R&D expense, you have to decrease it. It's a debit thing. You will debit or credit? R&D expense when? Very good. When? Stay with me. What else? What's the other difference you see in these two journal entries? What is missing here? Yes, when you want to try, what is missing here? Or I see Ari raised her hand. Yes.
Intangible asset.
Intangible assets. We didn't record, the Gap company didn't record the intangible assets. So we have to record the intangible assets. So we'll debit intangible assets and we will reduce R&D expense or credit R&D expense. So let's do the conversion entry for 2023. You are absolutely correct. Every Gap did not record intangible assets. Our goal is to show the IFRS numbers. So I have to debit intangible assets. Intangible assets. And I have to reduce the R&D expense. So reduce R&D expense means what, Matteo and Jake? Reduce R&D expense. I'll debit R&D expense or credit. Expenses are debit or credit? Credit, Matteo. R&D expense is a debit thing. I have to reduce it. Reduce means do the opposite. So credit it. Okay? Credit it. So first year's conversion entry, please. Please try to participate. It will help you. Oh, I said this answer in the classroom. That's how I remember it. I'll never ever forget it. R&D expense. And how much? Who can tell me the number? Who didn't talk today at all? Who can tell me the numbers here? Eddie, you wanna try? Steven, you wanna try? Edley, you wanna try? How much R&D expense I have to reduce? How much intangible assets I have to record? Yes! Yes, Eddie. Eddie, I say. You cannot tell me.
I can tell him.
You didn't? Okay, okay, Eddie, yeah, go ahead.
195,000.
Right? Mark, you are right. 195. Will, are you getting it? Steven, where is Mario?
That room.
Text him. Okay, so 195K, 195K. First year, not a big deal. Very easy. Now, second year's conversion entries. Let's do second year. Second year, what I need to do, 2024. Remember, second year will have cumulative impact. Especially the balance sheet items will have cumulative impact. Because balance sheet things, we carry forward from one year to the other year. Okay, depreciation, we had a difference. We don't need to do the R&D depreciation expense. But what we need to do, look at the second year. This is my second year. What I need to do? They did not record amortization expense, so I have to record amortization expense because my goal is to show the IFRS numbers. So I will record the amortization expense. Oh, I forgot to write it. It's 19,500, 19,500. So for the second year's conversions, I will record the amortization expense. And I did not reduce any intangibles. I'll reduce the intangibles. This is one thing. We will do it. Second thing, remember last year I didn't have any intangibles. Now second year I'm doing the conversion entry. So I'm pretending, oh, last year they still used US GAAP. Right, they basically, the subsidiary is not changing anything. So their book, my book last year, the difference still exists. So the parent just did the conversion to do the worksheet. So what I'm gonna do, these intangible assets is a cumulative balance sheet thing, I have to record it. Last year, I had R&D expense differences, but I don't need to do anything per se R&D expense. But because of this US GAAP R&D expense, which was higher, their net income was lower. Because of their net income was lower, their retained earning was also lower. So I have to increase the retained earnings too. So for this one, we have to do a couple of things. First, what we gonna do? First, we will do amortization expense. You can do it in one entry or two entries. First, they didn't do any amortization expense or intangible assets. So I will do that, right? So second year, I have to show this number, debit amortization expense. I am the US GAAP company. I had nothing, but my goal is to show the IFRS numbers. So I didn't do it. This entry was missing, so I'll do it. Intangible assets. Second thing, cumulative impact. From the last year, they had intangible assets. I didn't record it. It's a balance sheet thing. So I will record intangible assets. Intangible assets debit. I'm doing two separate entries. Connect might combined it. You can also see, I'll show you what it would look like if you combined it. But showing separate, sometimes the students get it easier. So intangible assets, I didn't have it, so I will write it. Intangible assets debit. And the GAAP did not record any intangible assets, 195. So I wrote it. It's a balance sheet thing. So although that happened the last year, I have to show cumulative impact. What happened the last year? Anything else? Their R&D expense was lower by how much? Higher. US GAAP's R&D expense was higher by how much?
195.
195. Their net income was lower by how much?
195.
Their expense is higher, net income is lower. So their retained earning was also lower by how much?
195.
So what I need to do, I have to increase beginning retained earning by 195. Retained earning, yes, Ari, please.
Why are you showing again the debit to 195 for intangible assets after you showed it in 2023?
Very, very good question. Let me write it. Very good question, and I'll answer it. Right. So, Ari's question. I already did this conversion entry, right, Ari?
Yeah.
Why I'm again showing it? Remember, this conversion entry I did at the end of 2023 when I, as a parent, right before doing the consolidation entries. That does not mean that IFRS actually made the changes. So, IFRS books have this difference from 2023 to here. So, I am assuming that 2024, no changes happened here, or you didn't do any conversion there. Now you are doing the conversion entry in 2024. So that's why you have to show the cumulative impact.
That's
Because-
so confusing.
Okay, because IFRS, right? IFRS still has those numbers, right? And parent actually did not do the actual number on their book. This is just right before doing some consolidation work. They did the consolidated number, that's it. Second year, parent has their US GAAP. It does not reflect the last year's changes they did. Because these conversion entries we just do right before consolidation. It's extra paperwork. Second year, we have to assume we did nothing. US GAAP parent did all these things because these actually will not impact on parent's book. So we will pretend that this is I did right before consolidation. and it is not changing the original book on parents, IFRS, the subsidiaries. That's why in 2024, we have to show the cumulative impact. Okay? So this is, I can explain it. It's not actually the parent is changing anything, but they are just doing it before doing the consolidation worksheet only for 2023. And then I did consolidation reflecting 2023's change. Investors worldwide saw that, how as a parent plus subsidiary looks like. Now it's 2024. The consolidation entry I did only to show 2023's impact. Does not mean that they actually change anything. The parents change anything. Does not mean that, this is parents' book, right? But this will not go to actually parents' transactions or parents' income statement. Parent is still following the US GAAP. IFRS is still following the subsidiary is still following the IFRS, right? So I did this extra work just to show the consolidated numbers. Does not mean parent will actually record this on parent's book. So parent's book is still missing for the second year. Okay, this is like, so every time, consolidation is kind of a extra paperwork. This conversion entry we are just doing to see how it would look like. Two together. But this is just for combining two financial statements, converting these numbers. Does not mean that it will go actually to their book. So second year, same thing. Nothing change happened here. They are doing all these entries as it is. They are doing all these as it is. So we will show 2 years. Again, 2025, we will show all impacts because actually they are not changing anything, just doing this conversion right before to show the worksheet as an extra paperwork. So that's why this is a very good question. This also confused me, myself, and I go back and read. The book does not have that clear explanations, but what I got that the consolidation is extra paperwork. Okay, I have one more. Do we have time? One quick entry, please. Let's do it. Let's do it. And then we'll go home. Please, please, please. Okay. Okay. What number we are doing? One more. Langbai. Is it R&D? Yeah. Oh, another thing here. Again, can you please check? I think if it's the IFRS or GAAP, intangible assets or deferred development cost. Both are right, but I'm not sure what the Connect says. And you can also check. I love to do it separate, but Connect might combine these two. If you combine these two, what will happen? Amortization expense is as it is, retained earning is as it is. Just the intangible assets will be net of these numbers. Okay. So I cannot remember how did Connect did. Did they combine it?
Yeah, Connect does the deferred development costs.
Connect does, very good. Thank you very much. Can you also check, Jake, did Connect did one entry or two entries?
Did two.
Did two? Okay, very good. For some numbers, I remember notes payable, they combined it everything. So then we are good. So yeah, if you do it either deferred development cost or intangible assets. I have one more. Please, please, let's do it. One quick one. It is again R&D number 22. Let's do it. We have 10 minutes. We'll finish it quickly. Number 22. Thank you so much for checking it. Number 22, same thing, but now maybe we need to learn both the US GAAP and IFRS, right? And the same question we will see here, every same question here, right? You may say, okay, I already adjusted depreciation expense, why I still need to adjust retained earnings because of the cumulative impact, because by paper original parents is not recording this, but just because of doing the consolidation. Let's do another 22. I think it's again R&D. Yes. So let's do number 22. Langbai AB spent $1 million kroner in 2023. New product, 25% will meet the criteria, same thing, IAS 36 criteria, and they will call it either intangible assets or deferred development cost. Newly product will have revenues for 5 years, the same. Actually, this one you can do it quickly, it's the same, exactly the same. But the difference is that this time we will convert from the IFRS to GAAP. Last time we converted from the GAAP to the IFRS, this time from the IFRS to GAAP. So let's try to do it. So first we can do IFRS. This time you guys will help me, please, so that we can finish. And next class we don't need to use any, just review. Number 22. Number 22. Let's do first IFRS. Same problem, but now just IFRS to GAAP. And then US GAAP. US GAAP. Now, who can tell me what will be the IFRS's R&D expense? They spent 1 million kroner, but they can, 25% of it, they can show it as an intangible assets or deferred development cost. So 75% will be their R&D expense. So for R&D expense, IFRS, who can calculate it? 1 million multiplied by 75%, you don't need a calculator, which will be how much?
750.
So IFRS will show 750K as their R&D expense, and the rest will be their intangible assets or deferred development cost. Right. 250. On the other hand, US GAAP's R&D expense will be how much? Who can tell me US GAAP's R&D expense?
1 million.
Very good. They will do the entire amount. Assume that it's not a software company. Now, let's do the journal entries. We just did it. Can you guys try? IFRS will show 750 as R&D expense, 250 as intangible assets or deferred cost, and 1 million credit as cash. So let's do the journal entries. First year, all December 31st, so 2023. So they have R&D expense. R&D expense, I'm doing a bit faster because I want to finish it. If you get stuck, please tell me. 750, and then intangible assets 250, and they paid cash credit 1 million. On the other hand, the US GAAP will show the entire amount as an R&D expense. They will show R&D expense 1 million, cash 1 million. First year is good. Second year, now IFRS, I'm doing IFRS first because the sub is using the IFRS, will convert from IFRS to GAAP. Second year, can you calculate the amortization expense? They say that benefits will come, will generate benefits for 5 years. So whatever deferred cost or intangible assets, you will divide it by 5. That will be your annual amortization expense. And that's the IFRS will do. So December 31st, 2024, they will do amortization expense. How much?
50,000.
Yes, 250K, I'm writing it here. 250 divided by 5, 50,000, and you can directly credit intangible assets or deferred cost. Intangible assets, annual, right? So 50,000, 50,000. On the other hand, GAAP will do nothing because they don't have any intangible assets, so they will not do anything. Good. Now, what will be the journal entries? This time, conversion entry. We are converting from the IFRS to US GAAP. So you please read the problem carefully. One, we did the GAAP from IFRS. Now this time, IFRS to US GAAP. Now look at that. This is on my book, right? This is on my book. I want to show this. Cash, do we need to do anything? Cash is the same. We don't need to do anything. R&D expense, what I need to do? Increase by how much?
250.
250. US GAAP, as a US GAAP, I don't need to show intangibles. So I have to eliminate these intangibles. I have to increase R&D. So debit for 2023's conversion entry, debit R&D expense by 250, and as a US company, I don't need to show intangibles. I cannot. So eliminate the intangible assets or remove it, delete it. So credit intangible assets 250. Intangible assets 250. Now the second year, same, we will pretend that this is, they just did it only to do the worksheet, consolidated worksheet. Second year, US GAAP did not change anything. They are doing the same, whatever they did in first year, whatever they are supposed to do in second year. IFRS, they didn't change anything. They just did it only for the consolidated balance sheet. So they did what they are supposed to do in 2023, what they are supposed to do in 2024. So for the 2024 conversion, we have to show 2 years impact. Let's see, what are the impacts? Again, one entry or two entry we'll see. First, let's see, US GAAP. You should not do any amortization expense, but you did. So we will credit amortization expense, right? You should not show any intangible assets, cumulative impact. So we'll credit intangible assets. But we can break it into two parts. Again, you can check whether there are two entries. First, let's do this one. Amortization expense, we should not show it. So I will eliminate this, amortization expense credit. Amortization expense. Let's do two separate entries, or you can combine it. I should not reduce intangible assets. Right. So just, I should not show this at all. So I am flipping it, reversing it to eliminate it. So I have to debit intangible assets. Right. Now let's try to think back the other year's impact. What we did other year. The previous year, my R&D expense was lower by 250. And that actually, what did they do? Now remember, IFRS, try to think about the concepts. IFRS R&D was lower. Their net income was?
750.
Their R&D expense was lower by 250. Their net income was higher or lower?
Higher.
Higher by 250. Their retained earning was higher or lower?
Higher.
Higher. So I need to reduce retained earnings. Reduce retained earnings means debit retained earnings. So debit beginning retained earnings. This is my last year's impact. Beginning retained earnings